This video is brought to you by the award-winning prop firm, Fidelcrest. All right, folks, here we are on Trading Up. We've got Brian Tang here in the house now. We've just done an amazing podcast. Go and check it out. Link under the video. Brian's going to walk us through what he does on a price chart with smart money concepts. So top-down analysis. So this might be slightly different than what you've seen on other parts of the channel here around how Brian approaches it. So yeah, thanks for sharing and welcome back to the show.
Yeah, always good to have you, Cam. All right, so let me share my screen real quick over here.
Fidelcrest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So what sets Fidelcrest apart? Well, it's their verification stage payouts of up to $30K in as little as 15 days. So you can receive your first payout prior to becoming a fully funded trader. Just complete the challenge phase and verification stage without violating any rules to receive your first payout. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more.
Okay, so guys, the first thing I look at is the weekly time frame. And once in a while, I would say every now and then, I'll check at the interest rates. So if, let's say, we were to look at the euro dollar, I will look at the rates of the euro and also the dollar. Now, I don't really do this because I'm a day trader, but it's good to know, like, generally, like, where the market is going, because in the forex markets, the rates are the primary drivers to the market. So right now we are at 4% basis points for the Feds, and we are at around 3% for the euro. So fundamentally speaking, if we're looking long term, the euro is poised to be in another leg to the downside. So there aside, if we were to look at technicals, the first thing I'll look at is market structure. Nothing simple, nothing fancy, just very simple. I drag my tool over here. This is the swing high, swing low. This is a swing high, swing low, swing high, swing low, swing high, swing low. And quite recently, the price has made a up move, breaking the recent swing high. That is almost near to the previous swing high as well. So it is notable that price has a little bit of bullish movement lately. But if we were to look at the overall picture, that can be due to this overall big move to the downside. So perhaps this can be the pullback for this entire move down, possibly causing it a leg down. And if you were to go compare that with the interest rates analysis that we had done earlier, this might be the move to the downside probably next year. So that will be done for the weekly time frame. The next thing I really look at the most will be the daily time frame. Honestly, as a day trader, a lot of people will talk about how the daily isn't as important as the 4 hour or the 1 hour, but that is a very micro view of the market, and I don't really like that. I prefer looking at the market from at least the daily time frame because it tells us a lot, and it is very important for us to frame the higher time frame narrative before we even start to look for trade ideas on the lower time frame. Because if we're too fixated on the lower time frame, the move tends to be it tends to be too microscoped. It tends to be too zoomed in. And that is not very good, even though you are a day trader or a scalper. So right now, if we take a look at the daily time frame, I would like to have a view of at least the past 60 to 90 days. So yeah, from now, currently it's November, up to April, we have a good view of the daily charts. So back to the weekly charts, we had established the market was in a bearish trend. As you can see, it's pretty much the same thing, just that there are more details to this. And this is just the premise of the market structure. Now, if we look at this current leg, we can tell that the price has just made a impulsive move, or in smart money concepts, we call it an expansion. What I will usually do is I'll take this tool, the Fibonacci tool at the bottom of the charts, all the way to the top, and then I will draw on this thing. Now, give me a second. All right. So what this really is, this is the premium discount tool array by ICT. Now, what we want to focus on is buying in discount and selling in premium. So this particular area over here is called the discount. And this is the premium. Now, it's not that we cannot sell in discount and buy in premium, but it is important to know that the probability of sales in discount is much lower as compared to buys in discount, because the way the market works is when you are in premium, it is of higher probability to take sales and of higher probability to take buys and discount. So now within each leg, you can also look at the premium and discount. So let's say the recent leg over here, up to the swing high. You can now tell that the market is building in premium, and then we start to look at zones or demand and supply. So we will take the rectangle tool, look to the left over here to this previously established swing high. You can tell that there is a area of supply, or what you guys call resistance over here. Now you couple up with this, you can now tell that there is a bearish narrative on the higher time frame. And then now you can start to look for the shorts on the lower time frame. So right now on a 4-hour time frame, we can tell that there has been some, I wouldn't say resistance, but price has been slowing down over here. And then coupled with this, we're also in a premium delay. And then the next thing we can note that there is some, in smart money concepts, we call this imbalance. There's some buying imbalance over here. So now that we have a couple of confluences, one, price is in the daily supply. Second, price is in the premium leg of the current premium discount leg. And then there is also some sort of imbalance here. So now that we have certain confluences pointing in one direction, we can start to look at the lower time frame for entries. What I usually look at is the 15-minute time frame. And then right over here, the first thing you can tell from this price action, you can tell that price is just sitting in consolidation. So what I will really look for is for a break of market structure, which is just a fancy term for saying a change in market structure, which is, let me just take my tool over here. We can tell that there is an uptrend over here, and this has been consolidating for the past 2 days. And this is usually quite normal. When we see a rapid expansion of price on Thursdays and Fridays, on the Monday and Tuesday, they tend to be a very heavy consolidation and accumulation. And if we were to look at the economic calendar, there's also rate voting news tonight at 8:30 Eastern timing. So price could be accumulating and waiting for distribution during the economic release. So that aside, what I'll wait for is for price to close outside of this zone. So either a close below this, and then I'll start looking for continuation moves, because that's what I mainly trade. And then I'll play this move to the downside, at least up to this particular area, because as we have established earlier, it is very high probability to take sales in the premium. So I would say if we were to look at if risk to reward was an independent variable, the first area to be taking profits will be this particular area, which is the equilibrium. The equilibrium is the area in between premium and discount. And then if we were to look at the left, there's also this bullish move from CPI last week. And in smart money concepts, we call this as a liquidity void. Because in this particular area, there was only buying and there wasn't selling. So we can also tell that there is a good chance that price will go down all the way here. And then, and if, and only if price makes a up move here, I wouldn't say it's a high probability to look for buys, but price can also do that. And in that case, in smart money concepts, we call this a liquidity run. So it will zoom on the 4 hours. We can tell that whenever we look at price like this, in this particular area, as most of the traders will usually have a short entry right over here with a stop loss right over here. Now, the whole idea of stop loss isn't really a stop loss. The thing is, when you place a short order at your stop loss, you have to buy the order back. And that is known as buy-side liquidity. So when the market is unable to make a move, the market may move up, take the buy-side liquidity, and then possibly feel a move down. Those are the things that can happen. But as of now, the highest probability is for the market to consolidate and accumulate enough positions to possibly feel a move down. Now, there seems to be a lot of predicting and trying to understand what the market is doing. That's how I really trade. But I wouldn't trade anything that I wouldn't see. So until I can see price moving below this and then possibly forming a continuation move, I will not be trading the markets actively. And then secondly, I'll be looking at dollar index for confirmation as well, because the DXY has a inverse correlation with the euro dollar. So if I were to look at the move to the upside, I'll also be looking, if I were to look at the euro dollar and I'm anticipating a move to the downside, I will be looking for an up move to the upside for the DXY. So if we were to compare the give me a second. If you were to compare euro dollar, you can tell that there is an inversely correlation with this pair. So if you were to do a quick analysis of the DXY, it's the same thing. Price has been in a continuous bullish trend, which is inversely correlated with euro dollar. What I'll first look for is levels of liquidity. Levels of liquidity is basically where stop losses are placed. So you can see that if you were to take a buy over here, the stop loss will be placed slightly below this. And that's where all the sell side liquidity is sitting. Similar with this swing low and this swing low. However, if we were to zoom in on a shorter term view, price has made an impulse and it's probably poised for a corrective move. And this is in conjunction with what we saw on the euro dollar. There was an expansion of a move to the upside and price is due for a pullback. So now this is also another confluence that we can add to our analysis.
Hey folks, ever wonder what broker I use? Well, I use HankoTrade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining HankoTrade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Well, that's a brilliant breakdown of your take on smart money concepts and how you do it. I think that's very clear for everyone out there watching. So thank you once again for sharing that with us, Brian. Now, what's the best way for people to get hold of you?
You can just contact me on Twitter at my username SOBERARYAN.
Brilliant. Good. Look, guys, we did do a podcast before this, so if you want to get Brian's full story, then check out the link below this video. And whilst you're there, hit subscribe, hit like, click on that notifications bell, and click all, and get more videos like this in the future. Thanks for watching, and we'll see you in the next one.